Hello and welcome back to the channel. My name's Adam Fyfe and I'm with eXp Realty. Today I've got my friend Josh from Mortgage Connection here on the channel. Going to talk a little bit about interest rates. What a crazy time to be alive in mortgage interest rates in 2022 and 2023. So Josh, why don't you tell me the viewers, a little bit about Mortgage Connection, who you are, what you do.
Yeah, absolutely. My name is Josh Higgelke, broker of record with Mortgage Connection. We are primarily a Calgary-based brokerage, but we are licensed from Ontario to British Columbia and everything in between.
Love it.
I've been a broker for 15 years and love this. This is my game.
Yeah, I'm glad you enjoy having these conversations because I know not everyone has the most excitement when they talk about mortgage rates and interest rates and all that jazz. So just this week, interest rates up another 25 basis points. Tell me a little bit about that. What's going on in the world?
Well, we've seen the 8th consecutive raise to the overnight rate, which directly impacts prime. So prime is now sitting at 6.7%.
Got it that time.
Yeah, I got it that time. It's saying 6.95. I can't keep up, it seems. So yeah, we're seeing that prime rate increase as they're trying to, the Bank of Canada, government's trying to fight inflation. But it's interesting because I get calls all the time, and just last week, Josh, we hear that rates are going up again next week. We need to lock something in.
Right.
And so, yes, we've seen rates rise from the beginning of 22 until about the fourth quarter of 22. But what we're actually seeing now is, so we see the prime rate rise. So everyone thinks that fixed rates follow, but that's not necessarily the case. It's not the case. The fixed rate is attached to the bond market. And so often we'll see the bond market follow suit with what the prime is doing. But right now what we're actually seeing, and I was looking today, and I sent you over a screenshot, we've actually seen the bond market fall. And it's continuing to fall. And it has since the fourth quarter of last year. So what we saw in the end of 2023 is as prime kept climbing and everyone's hearing rates are going up, we've actually seen that fixed rate start to trend downward.
Right.
And with the bond sitting where it's at today and the spread and what they're making in the fixed rate market, there's still a lot of room for fixed rates to continue to come down.
Wow.
So it's really interesting times, and if you're a mortgage geek like myself, but everyone hears rates are going up, but in actuality right now they're going down because the bond market is falling.
Right. And this is where education is so important too, right? Because at the end of the day, I think that there's a lot of people who go to mortgage calculators and they put in the numbers that they think, but getting a pre-approval is like the utmost importance, right? Even if you're not looking to purchase 3, 6, maybe even 12 months away, it's always worth a conversation to have because that information, even for me as a realtor, is actually quite surprising and something that I don't fully follow as I'm not a mortgage professional. But I think it's super important that people reach out to a broker like Josh and have these conversations. So without getting into the woods, what's kind of happening between variable and fixed, right? Because I think that there is without knowing professionally exactly what variable were super low and now they're super high, where fixed is obviously starting to drop a little bit. So where's the difference there?
Yeah, it's really interesting because you've got that spread right now. It's still, let's just say we have a prime -1.
Okay.
And you do have that with some lenders. So prime today, like we said, moved to 6.7. So that would give you an interest rate of 5.7 if you were on a variable.
Okay.
But what we're seeing now in the fixed rate world is there's a lot of banks sitting around 4.7. So normally you see that there's a bit of a discount to go with a variable rate mortgage, a savings. With that savings comes some risk that it could go up or down and fluctuate, but people will play that risk and hopefully hedge and win.
Right.
Well, what we're seeing today is if you take a fixed rate, you're actually 1% in the savings versus the variable as of today. So it's a pretty interesting time in that regard.
Right. And then kind of another loaded question for you, and I don't expect you to answer it in full detail because every situation is different, but what's like your recommendation for the average consumer? I mean, 5-year fixed is like that average that I've seen over the past, let's say 10 years. Are you still maybe leaning towards a 5-year? Are you leaning towards a little bit less? Every situation is different, and I understand that, but maybe just having a general conversation about the term.
Well, I won't pretend to be an economist.
That's totally fair.
But I do like to follow a lot of them, read what they have to say. And there are many people who have the belief that we've likely overshot the landing here a bit in trying to correct or fight inflation. And often we do. Like when the government tries to meddle with economics and they keep increasing prime the way they have,
Yep.
often they overshoot.
Yep.
And so many believe that we'll see these rates come back down, and not to historic lows that we
Of
saw during
course.
the pandemic.
Yeah.
Those were artificial rates.
It was crazy.
It was crazy.
Yeah.
So no one knows where it might land, but it's the belief of many that 12 to 18 months, we may see these rates come back down again and level out.
Okay.
And so no one knows where that is, but so many aren't really interested in taking that 5-year. For some, it's still
It's comfort.
Historically,
Yeah.
if you're a 4.7, you look at the historical charts, you're doing pretty good.
Yes.
And some just want to set it and forget it. But there are others that are taking that 2-year term, and they're curious to see what happens in those 2 years. They're betting that they'll, at the end of their 2-year term, we will see lower rates than today, and then they can reevaluate and lock into something maybe longer term at that time.
Yeah, and that's a perfect segue into talking about, with brokers, you have that option, like what is your payout penalty, right? What is your goal? What's your term? Because things change, life happens, and sometimes people, even if they lock into a 3-year, maybe something happens in 2 years. So you have that option now to maybe have a lighter payout penalty, or an option to port your mortgage. So just another reason of why you should reach out to a mortgage broker, because there's just so many different options out there. So with that being said, is there maybe anything else that you want to touch on? Do you feel like we've covered a good...
There was one thing you had mentioned, and even though we're seeing the rates trend downward, you had mentioned getting a pre-approval.
Yes.
Even if you're looking 3, 6, 12 months.
Sure.
I would say, especially given the volatility and what you've seen in the last 4 years, you never know what's happening around the corner. So it's great. Even if you're thinking 12 months out, get a rate hold in place.
Yeah.
I've seen people who had thought they're going to purchase further out, then all of a sudden rates shoot up. Let's go back to the day of the pandemic.
Yep.
If you had a 5-year fix held under 2%, it did push some into saying, you know what, we're seeing these fixed rates climb. They're going to 3, they're going to 4.
Right.
I've got this low rate hold in place. Maybe I will capitalize on that hold and buy a little quicker than I thought, just because that's the cheapest money that I've ever seen.
Yeah, fair
right?
enough. Yeah.
And so, yeah, it could influence your decision in a good way.
Yeah, no.
Or at least keeps your options open.
I love that. I love having real tangible options, right? Because at the end of the day, when you have options, you can make decisions, right? You don't have to have the hypothetical or what ifs. Like, just have a conversation. And yes, of course, you're going to share some information about your financial status, but no one's going to force you to do anything. And having a pre-approval really is just a benefit for you. So thank you, man. Thank you so much for coming on the channel. I really appreciate your time. I think that was a really good conversation. So if anyone has any questions about mortgages or the financial institutions or anything along those lines, please reach out to Josh. He's a friendly guy. I think you can tell. He likes to talk, and I think he can share a lot of information with you. So
Well, thank you. Yeah, I'd love any opportunities. So appreciate it.
awesome. Well, I guess we'll see you guys on the next one. Thank you very much. Peace.